Good morning, money magnets and master traders. It's your Uncle Charles here. And yesterday, the SPY managed to recapture the 20 daily moving average, and they even found some buying pressure around that area. As you guys recall, we had the false breakout setup last week on Friday, which led to a very nice gap down. But looks like the dip buyers went and bought the dip after having that gap down, closing just below the 20 daily moving average. My next question was, will we reject from that 20 daily moving average, or will the bulls recapture it? And as you guys can see, the answer was a recapture with buying pressure coming from that area, but we closed just below the 5 daily moving average. So I need us fellow money magnets and master traders to watch these two moving average, the 5 daily moving average as well as the 20 daily moving average. Remember that last Friday we lost the 5 daily moving average, so this bounce around 645 is where the 5 daily moving average is at. So this bounce could be a back test to confirm if this breakdown we had last Friday is legit. So watch what happens today. 5 DMA is around 645, so the bears must step up here, reject and break down 643, 641 and 639.5 or lower to put those lower targets in play. But of course, if we can clear the 5 daily moving average 645, that will put 646.5, 648 and 649.5 all back in play. Now remember that above the 5 daily moving average is overall bullish. Anytime the market is bullish, it spends much of its time, majority of its time, above the 5 daily moving average and treating that level, that moving average, as a support. Right now it is resistant, so the bears do have an opportunity to showcase their strength and break down the support. But if it clears and recapture, I would be bullish above 645, and if above, get ready for new all-time highs. Trust no rejection from this area unless those support levels that I mentioned at 643 and 641 fails. The main level that bears want to see break down is around 641. That is a fib level, and the 20 daily moving average is a little bit above that currently. So if it take out that level, it takes out the moving average as well, and it could send us to lower lows. I would expect to see the 630 to the 633 area get tested if we are blessed with another leg down. Moving on to triple Q, it was battling the 5 DMA, but I also want us to watch the 20 DMA, which is around 572.44 as of yesterday. It may have sloped up, but either way, if triple Q clears stays above 571 and clears 572.5, I would be bullish in favor we pop up to 574, 578 and possibly up to 580. That would recapture the 5 and the 20 daily moving average. But if we are to get any rejection or trust any rejection from this area, 570, 568.5 and 567 all must fail to showcase selling pressure and trigger puts. Moving on to NVDA, we are battling around this 5 DMA, treating it like a resistant. The bulls are trying to break through. Can they do it today? As far as levels go, I want us to watch the 171 and 172.5 fib level. If those two levels clear, we can end this little chop that we've been having these last couple trading days and get a bounce going, maybe go for the gap fill around 174 or much higher. That will certainly get us back above the 50 daily moving average. But if we are to trust any rejection, 169 must fail to put 170, to put 167 in play first, and then 164.5, 163, 161 and 159.8 as my target. So real quick, above 171 and 172.5 I favor a bounce, and below 169 and 167 I would favor more downside. Here is Tesla battling around the 20 daily moving average as well. If it stays above 338.5 and clear 340, I will be bullish and favor 346, 347.5 and 350 testing. But if we are below, if we can break below the 20 daily moving average, we need to break down 337, 335 and 333, then I would be bearish at least down to 330 to retest the 200 daily moving average. The bulls found buying pressure from that moving average yesterday, but if you are a bear, that is the moving average you want to see price get below 330. We can go retest the 50 DMA around the 323-ish area, and below that, if it fails, then the bearish continuation sends us more lower, down to possibly down to 312 and 309.3 for the next leg down. But that would be canceled if 340, 342, 344 and other resistant levels get cleared. Coin has been chopping, and it does have itself an inside candle setup. The range is 310.4 down to 295.4. Anything in between between that range is just chop. To end the chop range bullishly, bulls need to get above 303, 304.5, 306, 307.5, 309, and 310.4. If those levels can clear, we can get up to 313 or much higher. Chop ends in favor of the bulls. But if we are to end this bearishly, we need to break down 301, 299, 297, and then the bottom of the chop range at 295.4. If that level fails, the chop ends bearishly and we can expect another 10, 15, maybe even $20 move to the downside. Here is IWM, still lingering and still holding critical support levels so far. But to show bullish follow through, it needs to stay above 234 and clear 235.5 next to send us back to new all-time highs. But if there is a rejection, then 234, 232 must fail to put 231.4ish in play. That's this red line here. As you can see, it was a resistance level that's recently turned into a support level. But if it breaks down, I would be bearish with 230, 228, 226.7, and 225 or much lower in play. And here is the VIX. I'm not liking this. Looks like the VIX is dropping a bit to the downside. So we want to pay attention to this. If VIX is dropping, volatility is dropping, but also the VIX tend to go in the opposite direction of the SPY. So if it's dropping, this could mean the SPY could be melting up to the upside. So definitely watch the levels and setups carefully. But if VIX can get above 16 and clear 17.5, it can be bullish again with 19 and 20 plus, 20.2 plus in play. But if we lose in 16, 14.7 and 13 will be in play. And guys, thank you so much for watching. This is what I have for you guys this morning. Good luck today, and don't ever forget, you are a money magnet. Peace. You guys are still here? It's over. You know what? You want more content from Uncle? Okay, coming right up. Let's take a look at the option flow. Let's put in our favorite filters. We'll look at 100K premiums or above. All sizes, all expirations. We'll look at all that. Above the ask and the ask. I will also look only at the sweep orders. They're the most aggressive ones. So we want to look at the ticker symbols for SPY. Let's just look at for SPY. Okay, now we're just looking at for SPY with my same filters. And we can see puts. Majority for SPY contracts are for puts. A little bit into calls. Before I let you go, let's take a look at the dark pool for SPY. Now it's not showing anything now because it reset for today, but we look at the date for yesterday. Search, and we can see that majority of the price action was around that 640.4 level. SPY is above that right now. 1.2 billion in premium, and in second place was around 643.6 and 643.7. So right around that area is a good amount of activity. So what I do with dark pool levels is I also add them to my charts and use them as levels. So the main thing with the highest premium was 1.2 billion in premium, 640.4. So I would look at in my charts 640.4, probably add it to my charts. Above it, stay bullish. But if we lose that dark pool level, I would get bearish. And that's how I would use dark pool levels. Just use them as regular support resistant levels, only with a different meaning behind them, because we know, according to Cheddar Flow, that the big money players are secretly messing around that area, 640.4. So above it, stay bullish. Below it, get bearish. And I hope you found value in that. I love y'all. Peace.